As of last week close, all major US indices indicated a reversal pattern, with S&P, Nasdaq, Russell 2000 all indicated a bearish engulfing body, and Dow Jones with an inverted hammer. So is there a correction that is coming? And based on these studies, it is indicating a correction is developing. We will discuss how to manage these risks and if a correction is going to be a shallow one or a deeper one. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. What we're seeing here, their reversal signals are pretty rare, not just because all of them are giving out this indication at the same time, it is its magnitude. So its last week range that engulfed the previous week was wide. And let's study about the Nasdaq. So this was a last week range. It was wide compared to all the other week in the previous years. So the last time that we saw engulfing body was here, and it lasted for 3 months, but not as wide as what we saw last week. But how about the year 2022? That was the whole entire year that went into the bear market, literally the whole entire year. But we don't see this type of sell down as what we saw last week. And let's go back to what we're supposed to do a comparison between the four major indices. Earlier we discussed, based on these studies, technical studies, it is indicating a correction is developing. And I can be wrong on this analysis, but if I don't take a calculated risk, I am risking it all. Therefore, in such a scenario, I would like to take either some profit on those of my long positions or hedge into futures or options. So how do I manage my risk? If the market, instead of heading down, that's what we are seeing here, it continued to swing upwards. It means that I am wrong. Then how will I know that I am wrong? So in any coming weeks, because we're analyzing from the weekly chart, if it closed higher than the first week high, which was last week, so this means that my assessment on this correction is incorrect. Then I will have to reinstate my long positions. So why do I make such a plan? Because with structure, my risk can be quite small. So for example, if for this S&P, if I were to enter here, my risk is at the highest point in the first week of June. It's just this much. I make decision on investment and trading based on structure. Therefore, my entries and exits can done with a greater precision and not guessing too much into it. Of course, for longer term viewpoint, those technical structures, I will also overlay it with fundamental structures as well. So if my assessment is right, do you think that this correction is going to be a shallow correction or a deeper one? And let's take a look at this weekly chart in the S&P. I believe that correction is going to be shallow. So this is what I'm seeing here. Maybe from here you bounce up. Unless it's going to break this secondary down uptrend line, unless there's an inverted yield curve, then it is a different story. But let's go to the basis of how I develop this trend line. So usually I'll try to draw at least two trend line. This is what I call the primary uptrend line on the weekly chart, where I connect all these significant trough at least 3 points to form an opinion that this is a legit primary uptrend line. But within, I also saw another potential secondary uptrend line, and I could see a 2 significant points, maybe develop into third one. So I believe that correction is true based on the weekly chart, the engulfing body. And maybe for the next few weeks, there'll be a healthy correction and it may resume back up. But if the yield curve is inverted like this, then maybe this correction may go deeper than that. And let's look at what happened to 2022. 2022, it was a whole year of correction. The whole year was a bearish year. So what happened then was inflation or interest rate is already pretty high. then the short-term yield, it crossed above the 10 years yield, which is the longer term yield. Not supposed to be. When that happened, it spells some kind of trouble. So anyway, when inverted in the year whole 2022, and the yellow line maintained at a higher point, therefore we saw that the whole year was a bearish year. But right now, there's a risk. Why? Because the yield still pretty elevated at 4% and 4.5% for 2 years and 10 years. I'm watching this very carefully and closely. If the 2 years yield exceed that of the 10 years yield, or 2 exceed the 5 or 5 exceed the 10, basically the short-term borrowing should not be higher than the longer-term borrowing. If that happens, there will be a risk that it may go a little bit deeper like this. Yep. Then this move itself is maybe about 20%. So back then in 2022, this move was, I believe, it about close to about 30%, and Nasdaq was about 35%. That's what I'm seeing here. Will this correction go deeper subsequently? It really depends on the fundamental development. For example, geopolitical tension could be one of it, and that may affect the yield curve. But it is always from the initial phase, like right now, we have to pay a very close attention to. If not, we may have to pay a higher premium for our trades when things start to unfold. If you find what I shared is useful, please share it with your friends and yourself definitely. My name is Kon Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.